Welcome everybody back out to the morning draw, man. It is 7:29 a.m. June 26, 2023, and we are back, man. Sorry for my short hiatus. Last week, man, I didn't do any morning draws or the Sunday or Saturday situation because, man, I had to get the kids to camp, man. I had to get the kids out the house to get them to camp and just running around. I didn't get a chance to really break down the market the way that I wanted to before the open, and so that's what this video is all about. Just going through my daily process of where I look for potential areas of interest on the bullish side and the bearish side for the day. And I didn't get a chance to really do it, so I didn't do any morning draw. But man, I am back. I am back, man. Just like a chiropractor's office, man. I am back. Hey, man. Hey, I don't care. You could have thought that was corny. You could have thought it was cool. Either way, I said it. But anyway, man, let's break this down. Try to make this short and sweet, man. You are looking at a weekly chart, and what these lines right here represents an indicator that shows fair value gaps. It's taught to us by ICT. So let's see what we did over the weekly. See what we did last couple weeks. See we continued to just go up. We took out this particular swing, got inside of this gap, just about filled it, and now we started back down. I still think some of the closest liquidity is to the downside to fill some of these weekly gaps, which they show up as well on the daily chart. But right now, man, we did hit CE, which is consequent encroachment, as ICT teaches, which is 50% of fair value gaps. And that could send us up if we hit the consequent encroachment and it respects it. That's just an area to look for where the market could possibly respect a particular gap. So we've already hit that on the weekly and we've hit that on the daily. Now, could we get a push up to take these out? You see these nice little equal highs right here, and this gap to the upside. Could we possibly do that and then come back down? We could, but I still think for the week, me personally, or at least right now in the beginning of the week, I still think the closest draw on liquidity is to the downside, to just go ahead and rebalance these gaps, go ahead and fill these in. So if we come to the downside, let me drop to, let me take this fair value gap thing off, and let me drop to an hour chart in a second. But if we come to the downside, I'm looking for a closure of this daily gap, which is right here at 43.72. That's one of the areas also could see us. If we do continue to come all the way down, we could get down into this area, back where we had some slight consolidation. Could see the market come back down to that consolidation down in that area, which would be that could be 43, 42, 43, 48, somewhere in that area. And so that's what I would be looking at to the downside. Do I see us getting all the way down here, 43.06? I don't think we have any really big news drivers today, so I don't necessarily see us getting that far. The S&P 500, which is what we're looking at, has only been giving us probably on average about 40 to 50 points. Now on some of those big days, man, we have got a 80-point day here, a 90-point day there, but they have been few and far between. So I'm not really expecting us to get down here today. Now, we do know what they say. They say when you go up, the market takes the stairs, but when it goes down, it falls off a cliff, man, just like an anvil on the coyote's head. Bam. So if we do come down with some fury, we could get down here, but I just don't see it. I just don't see it. So those are the areas that I'll be looking at. Let me drop down to an hour chart. Let me cut my indicator back on, try to get this chart where I can see. Let me cut this indicator back on that shows previous day highs and previous day lows. Alright, so these lines show previous day highs, previous day lows. Okay, it's just easy for me to keep up with it. So we already took out Friday's low, came down. Now what did we do when we took it out? When you see it on the hour chart, we did first, we sucked back up, but we came back down and we did close below this on the hour. So that could show that we want to still come down, but hey, we want to finish up first and see what we may have. So We could go up and then come back down, because you know, hey, we have to go up to come down, we have to go down to come up. That's the way the market wants to play. It wants to do that power of three: accumulation, manipulation, distribution. So it wants to fool everybody. If they wants to come down, we want to come up somewhat to an area, and then we're gonna drop. If we want to go up, we go down to an area, and then we go up. But what I'm looking at, I would see, you see, we already feel this hour gap right here, which is right at CE on the daily chart, and we've been moving up ever since. But I would still keep my eye on this gap right below here. That's one gap that I'm looking at on the hour to the downside. I'm still looking to see how we react. I can see us coming up and then coming down. So those areas, if we can come to the downside, like I was saying, 43.74, 43.68, and could we get all the way down in here, which would be considered order block, and see what we do right here, 43.59. If we really want to get real bearish, man, and come on down, we could take out Monday's low from the 12th, which is right here, 43.48. That's only 40 something points away. But what was the high of this particular day, and what time was that? Yeah, so see, at London we kept down, but anyway, the high is at 44.1. So us getting down here to 43.49. I mean, that would be 50 something points. I mean, that's kind of like in line with the average that could possibly be done. So those are the areas we looking for if we come to the downside. 43.74, how we possibly react to the midpoint of that, 43.71, the closure of that, 43.68, possibly get down into this order block area right here, which will be 43.59, or at a low 43.48. if we want to see what we do if the market says, all right, we already hit this CE, now let's come to the upside. I want to continue up. The areas we'll be looking at, let me put this inside of this hour gap so we can mark this hour gap right here, which we've been kind of playing around with. Gotta make that look neat. Alright, so we can see what we do once we get a feel on this, which could be 43.93. We also have a smaller hour gap to the upside right here, so we can see what we do right here, 43.97, 43.98, or the closure point 43.99, the overnight high, which is 44.02. And also after that, I'll be looking at this swing as a potential place to see what kind of reaction we get, and then I'll be looking at this swing to see. Now this swing is right above another hour gap, and so we can see. So these are some of the areas that I'll be looking at to see how we react when we hit these areas. The closure of this gap, 43.93. If we go to the upside, 44.02, 44.08, 44.12, and getting up into this gap, which we'll see how it acts to the middle of it, 44.16. So those are some areas. We have some relative equal highs up here. So those are some areas that I'll be watching. Hey, but anyway, man, that's the daily draw. I think we're coming down for the day. At least I think we're gonna come down and fill that daily gap, which is also a weekly gap. I think we're gonna go ahead and finish that on off. I mean, it hitting CE left some beautiful equal lows right here on the hour. I mean, beautiful equal lows. I think the market could come back, take that out, finish up that gap, go down to some of those areas, and maybe push up. So that's what I'm looking at. That's what I'm possibly looking for. Main thing I'm coming in today, man, just practicing patience, man, and just watching Probably won't even trade today, just watching, looking to just finalize and settle on my daily routine, my weekly routine. And so that's what I'm doing. Anyway, man, I hope you enjoyed this. This is the morning draw, June 26, 2023. Have a good day. Stay safe and practice, 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 practice. Hope you enjoyed this entertainment. I'm out.